Good morning, good afternoon, good evening for the second time today. Welcome to the Friday Fix. Obviously, if you're hearing this back on the podcast, you have no idea what we're talking about. But as usual, the great, fantastic guys at AlphaPix will be giving us a roundup of the latest themes in market moving news, etc., that we've had throughout the week. And again, reminder, this first time on Podbeam for the Friday Fix, so hopefully makes it a lot easier to get out onto the podcast, which seems to be so far. And hopefully we can kind of start spreading the word a bit more. And also, Spaces is a pile of junk. Obviously, although my first attempt at Podbeam today was not great either. But before we go ahead, I'll get the legals out of the way. Nothing discussed in the Spaces session. Podcast is trading or investment advice or infers any kind of endorsement by PiQ, AlphaPix, or indeed any of us three. And speaking of us three, what's been occurring, my dear friends?
Well, it's been a bit of an interesting one this week. Light on news flow, I would say.
Data.
And arguably, most people at the start of the week were like, okay, yeah, you know what, earnings season's pretty much done and dusted. Now, the big events, Friday, non-farms, ADP, going to precede that, but let's see where we go end of the week. And then all of a sudden, we got a US government shutdown, didn't we? So we don't have NFPs today. So it's a bit of an interesting one. And the angle I was going to take from it is not the sort of generic, US government shutdown, everything's going to pot, what we're going to do. But I wanted to focus more on the angle that the Fed's next meeting is October 28, 29. And the question is if this shutdown lasts for another week, 2 weeks, 3 weeks or whatever, and we don't get any more meaningful data out for the Fed, do we feel that they will basically almost close their eyes and say, okay, we're going to cut by 25 basis points because that's what the dot plot indicated from the last meeting? Or do you actually think they say, do you know what, we can't really make a clear decision here. We're actually not going to cut and we're going to wait to get more data?
Well, I know what I think. I know what I think they should do, and I believe it's probably what they will do. But Jesse, you go first.
Yeah, I think it was actually a comment that I'd heard.
Hang on. So he's blaming someone else for his decision. What a mug.
Plagiarism.
It was a comment which I really agreed with, that the less data there is for the Fed to deviate from the dot plot, the more likely it is that the dot plot is going to play out. So if we don't get the data from any labour market, I think they already know what the state was, and that's factored into the dot plot and into the end of the year. So yeah, I think they cut in October.
Sorry, what? Sorry, what? Sorry, Alex, were you listening? What was his final answer?
So basically, sort of, Jay. So they cut in October if they don't get any more data, or if they do.
Yeah, I think if we're not going to say, I'm not buying Ryan a pint later.
Oh, fuck. Oh shit! I forgot I was seeing you. Bollocks. No. Listen, Jesse, I'm really listening. Go on. I think you're making some valid points.
You give your thoughts now.
Right. Okay. Sorry. Oh, by the way, we're at the Stafford, not in the city. So head this way. If anyone's listening, come and buy me a pint. I don't think they'll cut. I don't think they should cut. This is if assuming that from now until then, there's no the government remains closed. I don't think they should cut, and I think it gives them a great example or a great case to say, look, we wanted to cut. Trump's been all this time badgering, beating the drum for us to cut. We want to cut, but we can't cut when we don't know what the hell is going on. Because I think not only is that probably the most prudent thing to do, but it really does turn the tables on what Trump's argument. Because what a great thing for Powell to be able to do now. Powell can literally say to the world, I wanted to cut. The president's wanted me to cut all this time. We wanted to cut, but unfortunately, there's no running government, and we need to work out. We need to see how this plays out. I think it'll be proper how the turntables.
How the tables have turned. Not the turntables.
No, but it's the meme from The Office, you mug.
Oh, is it?
Yeah.
Oh, come on, mate. Well, valid point. I mean, I would actually sit somewhere in between here because
they cut 12 and a half.
Yeah, they cut 12 and a half. Is that a cut's fully priced in basically for October? So is it if the shutdown, if it keeps going on another week and maybe another week from there, then I think you'll start to see pricing move towards more of a 50-50. And I almost think you're going to see actually a fairly strong correlation between pricing out a cut and the extent and length of the government shutdown. Because I do agree with you that it would kind of be a bit foolish to cut if you get no data out for the rest of this month.
Yeah.
But by the same token, the price going to cut right now. So it's we're either going to have to see markets reprice.
But hang on. We do have plenty of time for them to walk back this pricing. And we've seen that before. Like, they've got enough time to get the Fed whisperer out, wheel him out in their little wheelbarrow, make some strategic comments to slow, and it won't be a fast one either. They can, they're very professional at how they do this and how they manage the expectations. So I'm not putting any weight between, but it's currently priced in. If we were 3 days out, then absolutely. But because we've got long enough time now, in my opinion, that they can manage the expectations very, very well. And we're talking like some seriously like kind of just little subtle hints, and those hints get a bit more, and then all of a sudden they're like basically ramming it down your throat.
Yeah, I agree with that. But to a certain extent as well, this conversation is slightly meaningless because when we look at
story of my life, mate.
When we look at large cap equities, I mean, literally, they could not
give a fuck. Could not give a fuck.
Which we will come on to. Obviously, ADP numbers were not great.
Go on the ADP,
and also the revision for August went from plus 54k to minus 3k. So you have a stinky revision. You have poor ADP numbers. You've got a government that's shut down all in the space of 3 days. And you got the S&P and the Nasdaq absolutely cruising.
Forward looking, mate. Forward looking.
Oh, it's already priced in. And it is, I mean, and Ryan, I was actually saying to a friend yesterday who's only sort of really been following markets for sort of 2 or 3 years. And I don't know what your take is, but as someone who's kind of been around markets for, I'd say, a fairly long time, like the moves that we're seeing where it's almost consecutive green candles on a daily basis on the S&P and on the Nasdaq with very little corrections.
Yeah.
Is genuinely very unusual. Like, I can't remember a last time when we're seeing such a low vol environment in equities where the market keeps going higher.
And this is obviously far. It'd be interesting to try and get someone do like a separate show, maybe with someone like in the the ETF space and whatnot, because I genuinely think that it's just a sign of how markets have evolved, and you got that sheer weight of passive flows coming in on a daily basis. So back in the day when we were trading, a quiet day, if a quiet day was coming out or happening and you knew it was going to be a quiet day, it was a coin flip whether or not we closed 0.5% low or 0.5% higher. Just the way the flows went away. But now it feels like if there's a nothing day or there's nothing going on, that the neutral effect is higher because you've got all the passive flows coming in every day. And it's obviously even more so since QE and whatever, all this cheap money that's out there. And I do think it's just that, the mechanisms of markets have changed. And I do think that it's a cliche that I often overuse, which is the path of least resistance is higher, but it's genuinely the case when you really strip it out and like kind of to coin to drop plumbing into it. Our dear friend Conks, wherever he is at the moment, well, we know exactly where he is, but I do think it's part of that whole plumbing of markets right now is you do have that organic bid in the market regardless of what's going on. Unless the shit hits the fan consecutively and the shit keeps getting bigger and smellier, in which case you start seeing people pulling out of these passive funds and whatnot. But even when things are a bit rocky, you still find passive flows going into the market rather than out of the market.
And you do even have the passive flows, yes, but also you do have real momentum when it comes to, I mean, the poster child AI and the sector behind that is that, like this week we had AMD signed a big deal with IBM. We obviously had like OpenAI, obviously, even though it's private, but the sentiment behind that, raising funds at $500 billion.
Well, and also, so great point you raised on that, like about the AI and the Mag 7 and whatnot. I know the Mag 7 was lagging. I still believe they are lagging behind the market, right? As a little subsector, I think the Mag 7. So if not, it's close, right? And considering how much they've been outperforming, I think there's a solid argument for this last quarter. People are going to be looking, big money, real money, are going to be looking at the Mag 7 and saying, well, look, we've had a cracking year in the S&P. Mag 7 is underperforming. It will overperform at some point. Is it now time to ship into the Mag 7 stocks or overweight Mag 7, which because of their weighting in the indices will have a knock-on effect and drag the indices up with them when they do catch a bid? But also stripping it back, as we all know, if you're a fund manager, you need to, you've underperformed the S&P or whatever, regardless if you can't catch up with the S&P, come end of the year when you need to put out your stats, you need to at least say you're equal weight or overweight S&P. So if you're not, you need to buy S&P to cover, to make yourself not look like a complete mug to your investors. And all these all these dynamics are in play. And nothing trading advice, and very rarely that I pick a direction. Inherently biased, but long. It's very rare that I kind of say, hang on a second, this is what I think is going to happen. But genuinely, I think we're going to see a really good Q4 for stocks, S&P 500 particularly.
I do agree on the Q4 thesis. I'm in the same boat.
Go on, Jesse. Drinks are on me.
Just to add some context to what you're saying about Mag 7 and the S&P. S&P is 14.5% year to date, and Mag 7 the round tail ETF is 20%. Don't know quite how they weigh that, if it's equal or not.
Yeah, that's a bit weird, because I know, as of last week, I swear I was reading that it was under.
So, just to add some more context, it's actually only since September that it's overtaken
okay.
S&P.
So
very much a good month, which has taken it ahead. The rest of the year's been in line.
Got you. Well, potentially then what I've said has been true, and they've just decided to go a month early and get involved.
Yeah.
Are we a couple of little ones here then? So if you're both thinking Q4 is going to be strong, are you going to take an over-under on the S&P trading above 7,000 by
I think I genuinely do. It'll be over 7,000 by my birthday, November 21st. If it's not, beer's on me.
Wow, okay, yeah. I'll take the other side of that. Yeah, I'll take the other side of that.
Go on then, 50 quid.
Shake your hand.
50 quid, but it's not for charity, it's for beers.
It is. Jesse can be the custodian.
Yeah, he can be on the orange juice, and
yeah. So okay, yeah. I think it'd be very interesting to see if it does keep going, because the other factor, and I've got a lovely little segue to the next section on this, but the last point I make on this is that the whole concept of this being a melt up, for me, actually doesn't feel too realistic, because melt up scenarios are when we see very extreme moves higher over the space of a week, 2 weeks, that feels very abnormal in price action. Whereas when you look at what we've seen S&P, NASDAQ, etc., it doesn't really feel completely irrational price action we're seeing. So I wouldn't even particularly say we're in like a melt up stage, but we might melt up to 7,000 and then see a correction for sure. But yeah, this doesn't feel outlandish from where we're sitting right now, eh?
Sorry, I was just scrambling for something in my pocket. No, I completely agree.
It's all right.
I completely agree. When I say I'm expecting a really positive Q4, I don't even mean aggressive. I just mean like more of the same, and that'll be enough.
Yeah. So let me hit you with this one, little stat attack. So we were talking about the Mag 7 index performance year to date. So the global semiconductor index, I think it's MSCI, I can't remember exactly where it is. It's up 40% year to date. Okay, so that's our benchmark. So what
40,
about
40, yeah?
40, yeah. So now gold miners. Okay, so gold mining stocks year to date, is it over or under semiconductors at 40%?
Jesse?
Is over.
It is over. It's over by quite a bit.
Yeah. 135%.
There we go.
ETFs up, which is, obviously gold has rallied and is on track for its 7th straight weekly gain. But yeah, gold mining stocks have
picks and shovels, mate.
Quite literally.
Well, and also, jokes aside, picks and shovels in data centers as well. Like our mutual friend, Citrini, he's been banging that drum for a long, long time, and he's creaming it in. And in actual fact, if he's listening at some point, he can get over and buy me a beer with all his women's.
It's true.
That's it. Fuck it. I'm Vegas next week. He can come and meet me over there and buy me a few drinks.
Yeah. And I don't know. Yeah,
just on that, because you were saying that semiconductor ETF. Gold alone is outperformed semiconductors year to date. So the miners who have kind of operating leverage as well. So, way ahead.
Yeah, exactly that.
Yeah. But I would argue, when you look at something like gold, that is more in a melt-up situation right now.
Yeah, I'm kind of expecting...
it looks frothy.
Yeah, no, this is it, right? And we know a frothy market.
I love a frothy market.
On this show, we know a frothy market. But no, I completely agree. I think like S&P... I think, if you're comparing the two, so they're both like all-time highs. It's completely different. S&P seems very, very managed, as you said earlier on. I think that's the crucial word there. Gold, it does feel a bit of like people are getting very frothy. Like everyone's willing to pay the high, which is great until all of a sudden no one is willing to pay the high, and then there's a lot of weak length in the market. And I think you will get some falling out, because you'll get the gold bugs going, no, everyone's buying it. They're buying physical. Well, there's a lot of cash. There's a lot of cash gold being bought, and if the bid pulls out there. Everyone loves a good pull-out story. Yeah, I do think we could have a couple of, also also a down week in gold is healthy for the market, right?
For sure. Yeah. And I mean, because the other one as well is that I'm starting to see a lot more of like the gold price action heading higher, and people doing, US government shutdown, safe haven, gold's being bought, or, S&P animal spirits. Yeah, that supports gold higher. Lower interest rate supports gold higher. And it's almost like every single macro theme going on in the markets right now is like, oh, that's a gold higher story, which is kind of like, I mean, yes, in some ways, but all of a sudden, if you see gold correct lower, some of those macro themes can easily be spun into well, actually, yeah, that's a gold lower story. So the whole correlation causation chat, I think, is one to keep an eye on.
No, absolutely, mate.
Jay, what's your thoughts on gold?
Yeah, I think we have had such a huge move. It probably does need to, even if it's not going to pull back necessarily, we will have to go through some period of like consolidation, and we'll have a bit of a quieter market in gold, I think.
Yeah.
Right, so screaming higher it is then, lads, right?
yeah, basically. Play this back.
Buy calls, buy out the money calls now.
Yeah.
Contra Friday fix.
Friday fix. And then the one which again talks about the sort of animal spirit vibe is, I don't know if you saw this story, to end the quarter, I think it's Monday or Tuesday I saw this, global M&A activity passed $1 trillion in value for Q3, which is being used as another sign of sort of renewed optimism in equity markets. 47 deals valued at more than $10 billion. Obviously, the one this week, Electronic Arts, which got taken private, and a multitude of others. And the reason I think this is interesting is that because we had that lull over the pandemic and even coming out of it when no one was going public. And so I saw a little clip basically of one guy saying that there are so many deals that have been shelved in recent years that have now been pulled back out and looked at in terms of being viable. Yeah. So in actual fact, I think this deal making really continues into Q4 and even into Q1.
Well, also speaking of deal making IPOs, even Prince's the tin fish. We got a London IPO, and believe it or not, an IPO in London. When was the last time that happened? But I think and as speaking of someone that's about to go out and try and raise some money, I'm happy that people are freeing up with their cash a little bit.
Yeah. I mean, it's
drop me a DM if anyone's interested.
I was going to say, I mean, when's PiQ going public? That's what the people want.
Well, we might have to do a token first. I don't know.
Do a little you'd be on the AIM. Do you know what I mean? You'd be market making your own stock. That's
mate, aim, I'll miss. Oh God, Ryan, stop it.
You'd have a little 10% bid offer and just be
Oh, absolutely.
flicking back and forward.
Look, if anyone from the FCA is listening, that's a joke.
That's a joke. None of us should be taken seriously on this show. So and then the only last one I wanted to talk through, and I missed this on X, but Jesse pointed out to me, was don't know if you saw it, KKR partner on Wednesday at Bloomberg. Bloomberg had an event, and I'm going to say this with a straight face, entitled "Women, Money, and Power." Okay, which is fantastic.
Yeah,
and her quote was, "There are 19,000 private equity funds in the US. There are 14,000 McDonald's in the US. How are there more private equity funds than McDonald's? That's crazy." Which is crazy when you think about it.
Is it though?
Well, I mean, I think it speaks to the saturation in private equity over the past decade that we've seen. And I think is potentially a bit of a red flag.
Well, I think I can understand your point, but I think there's a lot of these, there's so many niches and there's so many, you think of how many businesses there are in general and how many companies there are in general, how many companies are actually trade on the US market. So I don't think it's that weird. And if they're making money, fair play to them.
It's true, but I would say it popped off in the past decade with low interest rates, but now the interest rates are more elevated, and over the past year we've heard these stories of they can't find places to allocate their capital, the cost of capital is too high, yada yada yada. Does that 19,000 figure kind of signal a little bit of a peak, near-term peak in
PiQ, mate, PiQ.
Private equity euphoria?
PiQ, not peak.
Yeah.
No, potentially. And also there's a lot of route to market now for private companies to raise capital. We're seeing like the likes of Robinhood and that start freeing up markets for private industry. So potentially, that does get PE bros, it sidetracks them. So, how do we short them? Is there a basket of them we can short?
Well, yeah, I mean, yeah, that's a theme. And also, if you got more IPOs, then it's kind of like, if that sentiment's returning, do you need private equity if more people are going to start to enter public markets? Yeah, Jay, any thoughts on that?
Not too many. There was that one story a couple of months ago about, I don't know the fine details now, but it's just coming back to mind, about the ETFs that were kind of accessing private equity, some weird like public market private.
Yeah, this is what I mean.
Yeah.
I think, potentially, because now you can kind of bypass those. Yeah, potentially we don't need them anymore. So potentially you're right.
Yeah. But anyway, that was the interesting one I wanted to finish on. Don't know if anyone else has got a story. I haven't mentioned the UK.
No, no, good for that. I thank you for that. I think we'll know a lot more next week anyway, and I'll be recording this from Vegas next week, so that'd be even better. So I can say what I really think.
Yeah, exactly.
There's no way Ryan's going to be awake that early.
I will. I ain't going to sleep.
Let's hold him to account, listeners. Yeah,
I'll be awake, whether or not, what state I'll be in.
At what cost?
But guys, what cost? Guys, thank you so much for this. Hopefully this was seamless, apart from me fucking up at the start. But thank you as always, listeners. If you don't already, you're mad, but do follow the AlphaPix team. Do subscribe to their Substacks. Have a great weekend. We hope you've been profitable this week, and we'll see you all next week. Ta-ta for now.
Wonderful. Thanks, guys.
Thanks, guys.